Hi there, friends. I am Teresa Timms, president of TDR Mortgage and Real Estate Group in Upland, California. And there have been some additions to our mortgage roster, and I wanted to share with you some program information on the 3% conventional program. So the 3% conventional is back. It's been gone for quite a while, and it's really going to be useful to allow clients to come in with less than FHA, right? Because it's only 3%. And it has lower monthly mortgage insurance than FHA. So that's like the big, the big plus. The other thing about conventional 3% financing is that, remember, conventional loans, you can get rid of the monthly mortgage insurance in 2 years when you contact the servicer and you have 22% equity. So let's get started. So great news for 2015, the 3% conventional programs are back. Keep in mind that it's a conventional loan. So, our clients that are best served by FHA are probably going to stay in the FHA program. We are evaluating those clients, though, that are a little bit higher qualified to see if this program yields them the lowest payment as the overall best program for them. In the 3% conventionals, it's harder for me to cover all the closing costs like in the FHAs. The regular FHA, they come with 3.5% down, and we can cover all of their closing costs for just a little bit higher in the interest rate. Not so much in the conventional program. It adds too much to the rate. Okay, so there's 3 types of conventional loans that we're looking at right now. The 3% conventional product is kind of programmy in that that there's Fannie Mae 3%. Then there's Fannie Mae 3% My Community. The My Community is for a moderate income buyer. So there's going to be income limits and there's going to be first-time buyer restrictions. However, the income limits and the buyer restrictions are going to be a lot more lenient than if we were doing like a program. The other thing is gift funds are available. The monthly mortgage insurance is half that of the FHA. Now, one cool thing is that, usually conventional programs, you're stuck at a 45 back end. Sometimes you can go like 45.8 or 45.5, but 45 is the limit. But with these 3%, it's really going to be what the automated engine, tells us. So for Fannie Mae, of course, we're going to be running DU, Desktop Underwriter. And we, I haven't ran a lot yet because it's a new program, but, we can go over that 45 debt ratio as long as you've got somebody that's, pretty qualified. So that's a really cool thing. Let's see. Okay, so that's My Community and a regular conventional Fannie Mae. Regular conventional Fannie Mae does not have a first-time buyer restriction, but income limits pop in there, so it's a little bit of a puzzle. Now, coming out at the end of February or March is going to be a Freddie Mac 3% down program, and the Freddie Mac, you don't have to be a first-time buyer, so that's very cool, and will give us a little bit more options for our clients that are not first-time buyers. The Freddie Mac program is, do you remember the Home Possible? That's what the Freddie Mac program is modeled after and is. You also have reduced monthly mortgage insurance, and gift funds are okay. Now, income limits will apply, but they're pretty generous, but you do not have to be a first-time home buyer. So I wanted to just give you this information so that you could speak to your clients and talk to them as intelligently as possible, right? These quotation things are getting on my nerves. Anyway, so Teresa Timms, TDR Mortgage. I'd love to speak to you and to speak with your clients. Call me at 909-920-3500 soon, or today, or tonight.